Now, it is time for our roundtable session with topic of recession fears, challenges and opportunities during recessions. Before we start, I would like to introduce our moderator, Mr. Anwar bin Shuib, the chairman of MFPC International Development Committee. The panelists are Mr. Mahta Abdullah, Chief Executive Officer of Association of Sharia Advisors in Islamic Finance, ASAS, Mr. Zul Alwi Adam, Bursa Marketplace Guru and Principal Smart Saham Academy, and Mr. Umar Munshi, the co-founder of ITIS Groups. Without further ado, I will pass the floor to Mr. Anwar.
Thank you, Ms. Putri, for the introduction just now. Assalamualaikum warahmatullahi wabarakatuh, and very good morning to all. We had a very good discussion just now from all the earlier speaker, in which touched on the traditional investment from Satana, and then we have from the perspective of technology, and then we come into the cryptocurrency. So all that been discussed earlier, and now we have opportunity to get the input from the people who are having in practice in the Sharia fraternity. Cik Makhtar, Mr. Alwi, who's in the marketplace of Bursa Malaysia, when the other one in Mr. Umar Mushi. First, let us bring Encik Makhtar. Let me introduce the speaker, Encik Makhtar, who are a very well-known person in the Sharia fraternity. He's a Chief Executive Officer of ASAS, Association of Sharia Advisor in Islamic Finance, Malaysia. Encik Makhtar directly involved in corporate restructuring and turnaround management over the last 30 years with his accounting and legal background, involved in Islamic finance advisory services around the middle of 2007 and focusing on Islamic finance talent development since 2009. Wide engagement with regulators, Sharia scholars, industrial practitioners, academicians, and public at large in Malaysia as well as abroad. Restructuring ASAS, which is the Association of Sharia Advisor in Islamic Finance Malaysia, since 2018, and invited on various capacities in a few universities in Malaysia on matters related to Islamic finance curriculum. So, without further ado, we'd like to welcome Mr. Makhtar Abdullah. Please, Mr. Makhtar, the floor is yours.
Assalamualaikum warahmatullahi ta'ala wabarakatuh. Thank you very much, my brother, Mr. Moderator, Brother Anwar Kuib, MFPC President, Mr. Vincent, Organizing Chairman, Brother Muhammad Hairul Daim. Thank you for putting the perspective of this event from the beginning. MFPC Executive Director, Tung Kaying, thank you for inviting us and inviting me for this event. Dedicated MFPC team and organizing team, fellow speakers. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh. The topic of my presentation is basically just to warm up the forum, and we're supposed to go for Q&A session later on. I will share about the recession fears, challenges and opportunity during recession, but I will focus more on the Sharia fraternity. I'll try to go quickly on the time given, which is about just 10 minutes, 10 to 12 minutes. Quick look on the recession fears, the impact from the previous recession and cycle, the impact on Islamic finance, the impact on Islamic social finance and Islamic fintech, and the opportunity taken before I conclude with the how we want to navigate throughout the recession. Okay. Quickly on the recession fears. I think before I proceed to the topic, let me clarify what I meant by Sharia fraternity. So widely, as mentioned in the presentation, Sharia fraternity is referring to Sharia scholars, Sharia advisors, Sharia practitioners in the industry, which include everyone here, and the industry direct workforce, either they are workers, professional, or practitioners. We have a lot of players playing their best role in their respective stakeholders function. We would like to focus on the capacity building on the important component of Islamic finance, which is the Sharia fraternity. This is one of the important features that differentiate Islamic finance from the conventional finance. When we talk about Islamic finance, it's double cutting across banking, takaful, Islamic capital market, as well as the latest one on Islamic social finance and Islamic fintech. Almost everyone in the forum, I think, are part of Islamic Sharia fraternity. But in Malaysia, if you are involved in Islamic finance, even as a lecturer, you are also part of this development or human capacity building that we are focusing on. You can be a salesman, you can be a consultant, you can be a professional body that involved. But again, as a small portion, up to date, we are only about less than 2% of the global financial industry size. We don't have to wait for them to sneeze. At the moment they move their body, of course, Islamic finance will be affected. But we, in our own way, try to look at and try to contribute our best performance as well as capacity to be there at any economic curve or economic cycle. On my next slide, I share with you the impact from the previous recession. To be fair with Islamic finance, we had our global economic cycle in 1975. Don't mention about 1939 or 1929 when the Great Recession, when Islamic finance technically is not in operation. We were there in early 1975, but it was not so much involved. Partly hit during 1982, deeply involved in 1991, and of course, we were there swimming together in 2009, followed by the impact of COVID-19 in 2022 and 2020 and 2022, and the 2023 that we are talking about. Thank you to Brother earlier who mentioned about this nice landing, not the hard landing, toward the potential recession for 2023. Well, looking at the 1991, people start to realize that there are alternatives for conventional finance. This is also a point where we prove that Islamic finance are technically resilient. Maybe because of our size then, maybe because of our exposure then, and maybe also because of the popularity that we involve. And as today, we have covered about 80 countries. In total, there are about 80 countries that are technically involved in Islamic finance, unlike in the early 1990s where the third or the fourth economic recession happened globally. For the 2009 recession, we realized that there were big impact on Islamic finance from different sectors. So going to the next slide, the first we have few generation of Islamic finance fraternity in the market at the moment. Um, what I try to describe in the bottom of the slide is that we have the first and the second generation of Sharia fraternity who faced the challenges in 1980 to 2000, the first 20 years. That was the early days. If you can remember, in Malaysia, we started Islamic banking, Bank Islam in 1983. We had our monopoly until 1993. And then between 1993 to year 2000, we had a mixed market. We have international involvement. We have expansion into Islamic capital market and Takaful. And some of people who were there during that time and who are still there, maybe around the age of early 60s or early 70s now. Most of the bankers, I think they have retired. Most of the players in Islamic capital market as well as in wealth management, maybe they are just sitting back now, not so much active. Then we move into the second 20 years of Islamic finance, where the third and the fourth generation of Islamic finance fraternity come in. This is where the industry are more regulated, more structured. A lot of regulation comes in from either Bank Negara or Securities Commission. And this is also where the financial crisis hit us. And we also noticed that changes made in or for the conventional sectors that were badly involved also impacting the Islamic finance operation. We also noticed that by the second part of our Islamic finance journey, the second 20 years, we have a lot of competition from our conventional, because by then we already stepped up and try to have a proper presence in a lot of jurisdictions. At the same time, we start to talk about fintech, we start to talk about globalization, and slowly people were talking about environmental impact in the end of 2020, in the end of year 2000. The fifth generation of Sharia fraternity came in between 2020 until now. I don't think we can talk to the earlier scholars about challenges during the 2 years of pandemic of 2020 and 2021. You also notice that the challenges come with impact as well as also facilities of the ecosystem. By then, in the year 2020, we have fintech, we have cryptocurrency, we have a lot of 5G that supporting the communication. We have COVID, we have global event that also impacted us in the form of a typhoon, earthquake, so on and so forth. We still remember what happened in Aceh when everybody were disconnected and how we quickly react on a very cooperative ground, regardless the races, regardless where we are and what we are doing to address the issue. The second test or the recent one was even in the event in Turkey, where the response time was very fast as well. So this is where the fifth generation of Islamic finance fraternity respond to the issue of the people, the planet, and not only talk about the profit. At the same time as well, you would also notice what Mr. John mentioned just now about the new asset classes, about the digital asset. Yang Mulia Tengku Deni mentioned about the fintech infrastructure that we have at the moment. So these continuous development challenges call for refreshing the upgrading of the internet, of the professionalism of the available Sharia fraternity in Malaysia. Okay, I try to go very quickly on this part. I will not mention about what Tengku and John had mentioned earlier. Um, you would also notice that Bank Negara launched the BBI and BBIT in 2018 and 2020, where you would also realize that people are more open talking about zakat, sedekah, and wakaf, unlike in the previous year. In Malaysia, you can look at how lembaga zakat Kedah, for example, they are very transparent on where you put your money and where you spend. You can also look at the four banks that are leading the social finance initiative, which are Bank Islam, Bank Amalat, Hong Leong, and PINB. So I will leave it to Brother Umar Munshi later on as our speakers to elaborate more on the social finance, as this is part of his area. And I would like to straight away go to the opportunities taken during this cycle of economic event. Number one, what we are trying to do and what we've been doing seriously is basically to close the gap between the Sharia educated and the non-Sharia educated human capital. So we have people who from the beginning, from their primary school, secondary school, colleges, universities, and postgraduate, only study about Islamic finance. They don't have opportunity to learn about economic finance, even actuarial science, and all those technical parts. And we have another side of people who learn throughout their education journey nothing than Islamic finance topic. So Bank Negara realized that they have been going on parallel. We have two tracks until 2017 when they proposed a special program that supposed to close the gap between these two professionals people. We also do continuous assessment from time to time because we do know that the market change, the expectation change, the response time change. You know, maybe last time the scholars would have about 2 or 3 days, maybe 1 week to respond to the new product development put to them. But now maybe they only have hours. Of course, with the support of the available information, they can respond. But you know, the responsibility for them if they were to give a wrong fatwa or wrong findings is it will impact a larger size of community. We also looking at the international presence. As I mentioned earlier, we have about 80 countries at the moment having Islamic finance operation, and 20 countries out of that have a structure of the National Sharia Committee Council at their central bank. Just to share with you, maybe some of you know about this fact, Malaysians have a presence in 6 of those National Sharia Committee level in 6 countries or 6 jurisdictions. So this is where we bring our knowledge, our experience, and at the same time we learn from them what they are doing, what the latest part, and also how they address the Sharia issue based on their situation. It is important that for you guys, the wealth management, the whoever that promoting the Islamic capital market product, to understand why there are differences between the application of Sharia in certain jurisdictions, why there are differences between the opinion of certain scholars, and how we mitigate the changes. The more we along the way throughout our experience in developing the capacity building in Malaysia and in this industry, we realize that it is much easier for an accountant to talk to their accounting community about Islamic finance. It is much easier for a lawyer to talk about the legal perspective of Islamic finance within their legal fraternity, to the engineers, to the halal operators, so on and so forth. We don't want Islamic finance to be an exclusive subject only dominated by certain people, so that we can versatile the deliverable. We can have a better storyline that suit any level of the audience that we want to address. The fourth one, we widen up the Islamic finance spectrum from just banking, Islamic capital market and takaful, into Islamic social finance and Islamic fintech component. I'm not sure whether we need to have a digital twin Sharia scholar, in the metaverse to give judgment or to give fatwa on certain metaverse issue, whether the implication of our digital twin in certain act in the digital or metaverse would impact us in the real universe. Those are the Sharia issue that may be small, but it is very significant in this current situation. We do have a strategic collaboration with wider stakeholders, including this session, where we work with MFTC to reach out to the wider audience, to the wider community of Islamic finance, so that we can learn and we can be prepared to serve the need and the demand. Last but not least is that we are preparing the Sharia Fraternity Succession Plan. As I mentioned earlier in my first or second slide, the first generation of Sharia fraternity in the age of 60 or 70 and above. The second one maybe 40 or late 50, early 50s and 60s. And we need to have a new breed of more versatile scholars to replace and to handle the current need, as well as the needs that demand by the community. So to the last slide, I think I'll try to make up the 10 minutes given to me. Regardless whether the economic curve is either up or down, the market will have their own way to play, and of course the market is always bigger than the size that we have in the practices. But Asas, as well as the Islamic finance fraternity, will focus on the capacity building to make sure that we have enough people to support the industry come recession, come good economic cycle, inshallah. So I will stop here for now. I think enough for the warm-up session, and then I'll hand over the session back to our moderator, Brother Anwar, for the next speaker. Thank you.
Thank you very much, Mr. Makhtar. Very good explanation and a door opening for many, I believe, inside here who do not understand the function of Asas. And I believe now they understand the work of Asas to bridge between people from Islamic finance, from the Sharia scholars, and with the practitioners who are coming from the non-Sharia understanding, so they can understand each other. Alhamdulillah. Thank you so much. So with that, we will bring the question and answers later at the end of the session. Now we'll go to the second panelist. So let me introduce the second panelist who are involved heavily in the stock market. Yeah? And many people know him. If you look at it, they are always appear in social media, and I believe many people in the investment industry know him very well, Mr. Zul Alwi Adam. So let me introduce Mr. Zul Alwi. Mr. Zul Alwi is a highly accomplished professional in financial industry, recognized for his extensive expertise and exceptional qualification, and he holds a degree in mechanical and manufacturing engineering from the University of Melbourne. He further expanded his knowledge through specialized certification and postgraduate studies, including a Master in Business Administration with focus on finance from UKM and a RAM Capital Market certification. Additionally, he obtained professional qualification such as Certified Financial Planner, Certified Islamic Financial Planner, Sharia Registered Financial Planner. Mr. Alwi is a licensed as a unit trust and takaful agent, financial advisor representative regulated by Bank Negara Malaysia, and a financial planner representative with extended scope under CMSRL or Capital Market Service Representative License. He has also completed various modules and certifications related to fund management, stock advisory, and training. Mr. Alwi has gained invaluable experience in the financial industry. He has served as a principal consultant at Azaz Wealth Academy, providing strategic guidance and wealth planning expertise as a principal advisor at TSI Group and principal trainer at Smart Saham Academy. He has showcased his comprehensive knowledge in the financial market. Mr. Alwi also has held leadership positions, including Wealth Planning Director at Phillip Capital and Group Financial Manager at Phillip Mutual Berhad. So without further ado, I would like to call upon Mr. Alwi Adam to share the session. So the floor is yours, Mr. Alwi. Your mic is muted. Mr. Alwi, your mic. Your microphone, Mr. Alwi. Mr. Alwi, your microphone. Your mic is off. You need to unmute. Mr. Alwi, can you switch on the mic? Your mic is your mic. I think maybe just let Mr. Alwi resolve the issue first on the microphone. Maybe with that, I will bring first our next panelist. So let me introduce our next panelist. So for the time being, let Mr. Alwi resolve the microphone issue. So let me introduce Mr. Omar Mushi. So Mr. Omar Mushi, he is a well-known person in fintech industry. He's a co-founder to Etis Group, also Group Managing Director, Etis Chairman, and also a Chairman in Islamic Fintech Alliance. Yeah? So Mr. Omar Mushi is a social entrepreneur from Singapore. He's the founder of Etis, or Etis.co. It is an award-winning investment and crowdfunding platform with regulatory approvals in Malaysia, Indonesia, and Oman. Etis has firmly established itself as the leader in fintech for impact-focused and Sharia-compliant alternative investment. It serves large and small investors from more than 84 countries to invest in companies, startups, and projects in MENA and Asia. Etis Indonesia, or etisco.co.id, is a licensed P2P lending financing platform that matches impact investors to short-term SME financing projects. Etis Malaysia, or etis.co/my, is the country's first Sharia-compliant equity crowdfunding platform, funding future tech, circular economy, and Islamic economy startup and SMEs. EtisX.com is a new cross-border investment platform with a wide scope of fundraising and investment options and opportunities. GlobalSadaqah.com is Etis Islamic social finance marketplace that matches charity, zakat, and CSR from foundations, corporation, Islamic bank, and the public to support the NGOs and social enterprise. Mr. Omar is the president of the Islamic FinTech Alliance, a group of pioneer Islamic FinTech founders, and on industries development committees and board. So without further ado, I would like to welcome Mr. Omar Moshi. Please unmute your mic, please.
Right. Thank you, Chair Anwar. Is my voice clear?
Very good, loud and clear. Alhamdulillah.
Right. Assalamualaikum and hello to everybody. It's great to be here. It's indeed an honor to be able to share. I will try and keep my session short and sharp. I have an interesting analogy to share with you as well. But a little bit of introduction before that, and let me share my screen to make sure that it's working. So very quickly in terms of background, I've been in Malaysia for the past 6 years, and I've been in fintech for the past 8 years, and I've been in Islamic finance for the past 11 years, and I've been an entrepreneur for the past 22 years. Right. So that's a little bit of summary of numbers of who I am and my background in that sense. And today, of course, the topic is about challenges and opportunities in times of recession in the context of course, wealth management and financial planning. So my background is, in the fintech alternative investment space in Malaysia, as you have heard previously from the previous speaker before this, two speakers before this. There's the RMOs who are regulated by Securities Commission. So technically in Malaysia, we are regulated as an equity crowdfunding platform where private companies can issue their shares on our platform like a mini pseudo IPO, right, for private companies. In Indonesia, we have a lending or P2P, of course, Islamic financing is what we do, Islamic financing platform. Essentially, we are like a digital bank in terms of the ability to provide lending or financing to, we can even provide financing to individuals, consumers, retail, businesses, government, right? So we are basically almost like a bank in Indonesia. The P2P there is very broad and it's a very, I would say, powerful license. In Malaysia, there's P2P as well. We don't currently have that license, although we intend to, inshallah, in the near future, be able to get that if SC agrees with us and provide some Islamic financing in Malaysia as well. Now, I'll touch more about Etis later on. But what I want to do now, and I hope all of you can see my screen. Let me share my screen. I want to jump to an analogy. I don't know whether it's an original analogy, but it's an analogy that I hope and I find to be interesting. And it's maybe a Malaysian or Nusantara analogy of congkak, right? So congkak economics or congkak investing. What's that got to do with what I'm talking about today, which is alternative investment, Sharia investment, fintech investment, right? So here are some key points. But just in case there are people here who don't know what a congkak is, this is a picture of a congkak. I am not a congkak expert. I frankly actually have hardly played it, but I find it to be a very interesting concept that is very relevant to the context of today, right? And the congkak basically is a very simple game, right? I'll just elaborate quickly, right? It's a very simple game. It's a board with holes or pits, and then you move, marbles or stones or shells, right? And you only can move it one at a time. And the objective is to keep moving the shells until you have a lot of it in your own home base, right? So that's how it works. Now, it's a very simple, very universal game that anybody can learn and anybody can play. And why I'm bringing it up today is because I see a lot of interesting parallels with the situation of a recession, right? So the first, Choka is not so trendy anymore, right? But fintech is alhamdulillah trendy, but there's a lot of similarity in terms of some of the fundamentals that I want to share right now. So one is diversification, right? I mean, all of you are much more expert than me in terms of wealth management and financial planning. And I believe a basic principle for most or almost any strategy is to have some degree of diversification, right? And in the Chongka game, you have to spread the shells. If you don't spread your shells, you cannot move your shells, you cannot move your marbles or your shells, you cannot reach your home base, right? So you need to diversify. And today with RMOs, with fintech, with platforms offering new kinds of alternative financial services, financial products, alternative investments, direct investments, private capital market investments. That's what we do, right? These are all different terms to discuss what we do. There is now an additional avenue to invest. And that adds into the diversification component of financial planning, right? Or investment. Yeah. So that's the first one I want to highlight. Now, the second one is with regards to giving access. I mean, the game of Chongka, anybody can play. You can even draw holes in the ground and play, So it doesn't require a complex setup. Similarly, when it comes to fintech and platforms, what we always strive to do within whatever regulatory limitations or technology limitations which eventually get solved is to make it easy and accessible, right? So fintech platforms like us make it easy as much as possible for you as whether you're as a financial planner or as an investor yourself or for your clients to invest through the platform. We make it easy, accessible, simplified, right? Let me give a little bit of elaboration. Like what we do is we help people in Malaysia. What we do, equity crowdfunding, is we help investors, small and large, savvy or not savvy, layman or expert investors to invest. We help you, right? We facilitate your investment into private companies. Now, without a platform, investing in private companies can be very tricky. There are a lot of potential issues and excuse me. And we know there's a lot of disputes and issues and problems when this is not done properly, right? Because there's no regulation around it, there's no structure around it. So that's when we come in, right? We facilitate that layer of the legal, the Sharia, the structuring, the due diligence, KYC, blah, 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 blah. All those things, there's the basic stuff, the basic services, the basic value that we as a platform provide, and that's what SC ensures in regulating us. Beyond that, of course, there's the commercial element of how we present and curate the deals and information and the kind of sectors we go for, and so on and so forth, right? But back to my original point, we make it easy for investors, and we make it easy for if you are a financial planner or your agency or your team wants to start getting involved with fintech platforms, and there are already a number of agencies working with various different RMOs in Malaysia, and we ourselves have spoken to a few. I started working a little bit with some of them. This is something that can be very useful for you and for your clients, right? Now, the other component is, about being creative and innovative. Okay, maybe Chongka doesn't sound so exciting, but when you play Chongka, actually there's a lot of strategy, and you can come in with a fresh mind without much experience and still win, So when it comes to fintech, it's about innovation. Right? It's a new thing. These platforms are a new model, a new approach, a new concept. When we started at this initially in Singapore, long time ago, 2014, it's quite old. We're an old startup, but at that time we were a bit too early, right? Fintech didn't exist so much, crowdfunding, there were no regulations at that time. So we only became a true proper fintech when we got licenses 2 years, 3 years ago. 3 years ago in Malaysia, 2 years ago in Indonesia. But we started earlier on. And at that time, we were quite surprised that the Islamic finance industry in specifically was so excited about what we did. Because what we were doing is just helping Singaporeans who were looking for halal investment to invest, right? But when we started doing our thing, the industry was like, oh, this is innovative, this is new, this is what's lacking. And even until today, there is still that gap, right? So for us, while we push our own business, we also push the sector and the industry. That's why we have the Islamic FinTech Alliance. And in Indonesia, my co-founder Ronald is the president of Asosiasi FinTech Syariah Indonesia, AFSI. And we push the industry, right? Because we see there's so much room for innovation. There's so much space for Islamic finance to bring benefit and impact to the real world. And what we are is exactly that. We are a channel for people to put money in the real world, in businesses, in projects that are actually having a direct, immediate impact, right? Whether it's general impact on the economy in terms of employment, activity, multiplier to the economy, and so on. And also additionally, human impact, social impact, environmental impact, the SDGs and the VBI elements, right? So that's where, there's another point, right? When you talk about Chongka, it's a real world thing, right? You're doing something in the real world. You're moving the bubble on the wooden board, right? So as an analogy, this is the same thing we do. We bring money to the real world. A lot of money is going to the real world all the time. A lot of it is not formal, it's not organized. So we help to enhance existing flows of money. The other thing we do is we help to activate new flows of money, right? Money that is moving, that is not yet moving, people who don't know how to invest in startups, people who don't know where to look for or where to find private financing or debt opportunities. That's where we come in as well, right? So these are a few points I want to start with the Chongka economy or Chongka investing analogy. There's strategy, there's patience, and there's foresight, right? And all of you financial advisors, all your experts out there, I'm sure you resonate with these three when it comes to an investment strategy. Yeah. So that's the Chongka part. Let me bring you to something more actionable and more direct, which is actually what we do and who we are. Okay. So for Athis, Alhamdulillah, given that we were a pioneer, we still are one of the, so-called market makers or market movers or thought leaders. Alhamdulillah, we have a good reputation. We have multiple licenses. We are the only platform in the world that is in the Islamic space that has multiple licenses. There are a few market leaders in the conventional space who have multiple licenses. Right? In the Islamic space, we are the only one right now, which is not always good to be the only one. It's a bit challenging sometimes, right? It's better if we have a group of very good companies and platforms, right, who are pushing Islamic fintech together. But alhamdulillah, a lot of new platforms are emerging in the past few years. So that's point number one. Point number two, we have a good, number of years of experience in financing and equity crowdfunding. And now recently we expanded to the GCC. And a very interesting point is we have investors from everywhere. We're not super big yet. We don't do huge volumes on a monthly basis right now because we only really started to grow in the past 2 years. For the earlier years, we were quite small. And only recently, in the past 6 months, we start getting institutional investment, mainly banks in Indonesia investing on our platform, right? So right now, we do an average of, in ringgit terms, from the low end of 1 to 2 million ringgit a month to the high end of 10, 15 million ringgit a month. There's the amount of money going through our platforms from individuals and from institutions, right? And one thing very interesting is since the COVID over the past 2.5 years, the biggest increase of retail investors is from the GCC, from the Arab countries, specifically from Saudi. So Saudi individuals are investing in Malaysian companies, in Indonesian financing or lending deals from Saudi, which is a totally new behavior. And we're very excited to have unlocked this new behavior, right? So there's a few things I want to share about Athis. Let me move on. I'll just share some pictures and so on. So alhamdulillah, as I mentioned, there's good recognition from the market. It's again not easy being the first mover, but right now, we moved first a long time ago, so we are quite mature already. And Alhamdulillah, there's a lot for growth of the sector, of the industry, of course for APIS itself, and definitely for other financial institutions and agencies and advisories to be part of this bigger ecosystem, right? I think we have barely scratched the surface of working with financial planners and wealth managers. I'm talking about this industry. Right? There are some very good relationships and movements happening already, but it's not widespread. So I encourage all of you to check it out and get familiarized and potentially explore partnership with us or any of the other RMOs in Malaysia. All right. I want to touch a little bit on what we're trying to do and what we have had an impact in. Of course, these are big problems which may never be solved in my lifetime or our lifetimes, but we can start the ball rolling, right? We can create the ripple effect, right? So on the left, the first point you can see here, we see that there are a lot of gaps in Islamic finance. There are a lot of gaps in finance in general, but our special focus is on Islamic finance, where there's a lack of halal alternative investment or direct investment. And there's also a gap in terms of fundraising options, right? In Malaysia and everywhere. So that's where we have these platforms. Although our products are quite specific, we don't have an offering for everybody to raise funds with us, right? We raise funds for very specific kinds of deals and companies. But as we grow bigger and bigger, as we have more investors, right? We are a platform, we have two sides, right? So as we have more and more investors who create a relationship with us and who invest in our platforms and who get good returns, we can offer more and more products to the portfolio that they can have of alternative fintech investments on our platform, inshallah. And the other two, I briefly touched on it earlier. Definitely, we want to create good and do good and avoid harm to people and planet, right? So, alhamdulillah, the second point is very, very important. And the third point is actually very interesting. A lot of Islamic finance in Malaysia, and Malaysia is the leader in Islamic finance globally, but a lot of it is, I would say, quite similar in terms of the impact to the conventional counterparts, right? Especially in banking, because there are various limitations and restraints and constraints for Islamic banks. Right? They can't experiment too much. They can't do high-risk investments, for example, or lending. We can, although we also need to balance the risk part, right? And that's where we are able to bring to market more participatory, more justice or fairness-based transactions. And this actually leads to economic stability in the long run, right? We share in the risk, we share in the profit. For example, in Indonesia, we do PO financing, project financing, short-term, right? And last year, we made returns of about 17% for our investors, and there was a 2% default rate. Right? We cannot always guarantee the default rate will be low, but last year it was low. 17% is generally quite good, right? So that was done to a musyarakah or profit sharing, like direct musyarakah. You invest in this SMEs project with, for example, the health ministry, and when the profits are realized, you get your share of profit, right? If it's delayed, you have to wait. If it fails, you lose your money. If it's faster, you get your money earlier, you get the same ratio, the ROI goes up. Right? So it's a very participatory thing. And we see that this is what actually also excites the Islamic finance industry. One very famous Sharia scholar, Dr. Agari, 5-6 years ago when crowdfunding first came out, I was there with him in an event, and he said crowdfunding is the closest thing to true Islamic finance today, right? Because it's direct investment in direct business based on a direct relationship of the funder and the entrepreneur. Okay, I won't go on too long. I can talk 1 hour about this thing. So I'll move on in the interest of time. I only have 2 more slides. In summary, that's what we do, right? Oh, sorry. Better finance, right? We believe that there's better finance that we can all adopt. It's not my brilliant idea. It's not my genius concept. It's based on Islamic finance, right? It's already there for us. And we already, especially in Malaysia, have seen some of the benefits of Islamic finance. Bank Negara is pushing the value-based intermediation approach to create value. And that's what Islamic finance is all about, right? So that's what we're trying to do, inshallah. And we're moving step by step as fast as we can. Of course, with your support, we can move faster. Second last slide, just to share our push in the market. On the right, we have an accelerator for startups to be prepared to go for fundraising. Right, we have Brother Ronald, my co-founder, heading the association in Indonesia. In Malaysia, I head the approval committee of iConnect or FinTech for Islamic Finance, where under MUSTI we provide grants to the industry to develop Islamic finance infrastructure and solutions. Alhamdulillah. So we realize we have to push the sector as well as push our own business, because we cannot grow it in isolation. We need an ecosystem around us. And important part of the ecosystem is the financial planning and wealth advisory, space, right, of players. Right? So that's something that I hope we can engage with more with all of you over time, inshallah. Of course, through this initiative today or this session today, I'm very happy that we have this opportunity to share with all of you. All right, just some snapshots of what we've done. I already mentioned some of this, right? Startups, companies that we've funded, some examples. And this is my last slide. So for all of you to try and relate this back to you and the earlier Chongka analogy, right? Alternative investment or fintech alternative investments or crowdfunding or whatever you want to call it, right? In different markets, there are different names for it: online lending, P2P, marketplace financing, so many different terms, investment, crowdfunding, they all mean roughly the same thing, right? What's the benefit is, these are three that I can highlight, right? For you, you can yourself invest, or you can offer your clients, of course, assuming we have a relationship and it's allowed by whichever entity you're working with, to provide diversity, right, diversification to invest in the real economy. And in the real economy, there is a certain degree of resilience. Of course, there's risk as well, in the real world, a lot of risk, right? But there's a certain degree of resilience when you invest in certain sectors that we know are generally more resilient, right? For example, when it comes to groceries, it's always going to be there. People are going to have to eat, for example, right? And secondly, fintech is a bridge, is something new. Whether you like it or you don't like it, it's there and it's growing. So it's better, inshallah, for you to be involved as soon as possible, at least to understand it, and inshallah in future to actually directly participate, right? The easy way in is just to check out our platform, sign up, get our emails, get our educational material, join our webinars and so on, right? If you want to transact a small amount, you can. There are deals that are available today on Atis Malaysia platform. You just go to atis.co/my. If you want, you can navigate to our Atis Malaysia platform. There's an Islamic fintech, B2B BNPL there, for example. There are a few other businesses. There are three, I think, that are live today. You can check it out. If you want to put very small amount, like 1 ringgit, 5 ringgit, 10 ringgit, you can do it as well on globalsedekah.com, right? You can give charity, right? So that's not investment, that's charity. The last point related to all of this is impact investing. We all know this is important. We all know this is trending. And more investors are looking for not only making money, but doing good with their money, right? So inshallah, these are three benefits or three angles that you can think of in terms of benefiting from working with or partnering with or collaborating with RMOs and alternative investment platforms like Atis.
Thank you so much, Brother Omar Moshi. Very well explained about the fintech, the involvement of Atis. So great. I believe this will be helpful for the practitioners in Islamic finance fraternity, whereby Atis, one of the provider of Islamic fintech, which people talking about Islamic fintech, but we have opportunity to have Atis here, and maybe somebody are scouting for how they can get themselves involved in Islamic fintech. Now we have one of the provider here. And okay, without further ado, I think we'll come back to our second panelist just now, which I hope all okay right now. So Mr. Alwi Adam. Yeah, welcome, Mr. Alwi. Still we have faced the mic problem. We didn't hear you, Mr. Alwi. still we can't hear your voice, Mr. Alwi. Yeah, we can't hear your voice, Mr. Alwi. We still can't hear your voice. Your mic. We saw the screen here. Your mic is muted on the screen. Yeah, I think let Mr. Awi mic problem be resolved first. So before I continue for the Mr. Alwi, maybe what we can do, I will bring the question first, yeah, to our first speaker. So in Encik Makhtar. So maybe we can bring Encik Makhtar to answer the one of the question first, and then I'll bring back Mr. Alwi inside. So the first question, yeah, from Mr. Ikhwan Hafiz Hassan. So, but he's already been answered, yeah. So never mind. If that's the case, I will bring my question to be answered by Mr. Makhtar. So please, Mr. Makhtar, if you can help us share on the how, if you look at it, the Sharia or Islamic finance do with the recession that had happened in the past. We are talking about 1980s, 90, 2000, and 2009. How does the aspect of Islamic finance do fare compared to the conventional finance? Maybe you can have Mr. Makhtar. So can we have Mr. Makhtar? Yeah, please. Yeah. Thank you. Okay. Yeah, you're on, Mr. Makhtar. Yeah.
Sorry. Thank you for your question, Mr. Anwar. I had the opportunity to be in and out from the industry a few times. The first one was in 1983. In fact, that is where we realized that during those days, there's no job opportunity for the graduates then. So I do know that some of my friends who graduated with accountancy end up become a prison warden, and they work in a prison warden until now, until they retired at the age of 58. Then come another round of exposure of Islamic finance in 1983. when the same time Bank Islam was started. When I asked Islamic Bank Islam staff then, what is Islamic banking? They said, I also don't know. So we remember those days when we have an issue on Islamic finance. We have scholars from Sudan and Indonesia as part of our National Sharia Council Committee at Bank Negara, because we don't have any people in Malaysia that have equivalent knowledge then. Among the first local Sharia scholars then were Allahyarham Datuk Harundin. We also have Datuk Hashim Yahya. We also have few other senior scholars. I think the one that remained in Bank Negara until he resigned recently is Tan Sri Datuk Dr. Muhammad Daud Bakar. So he was among the first Islamic finance scholars that sit at the National Sharia Council, and from then on we developed more Sharia committee members. Today we have about 145 Sharia scholars serving the industry, and Bank Negara is kind enough to allow 10 to 15% of those scholars or those Sharia committee members that are not from Islamic finance background. We have accountants, we have lawyers, we have engineers that also sit as the Sharia committee members. So at the policy making, at the fatwa making, this is where we have a colorful scholars with a colorful background to address the issue. That is number one. Number two, we also allow the scholars to guide in terms of the application of the law. As I mentioned earlier, previously we don't have much guideline, but towards the last 20 years, our regulation, our governance has developed a lot. So the scholars then help to translate the guideline and the application into the application, so that the industry knows what kind of documentation are needed, what kind of transactions are needed, what kind of products that are suitable for different market segments. So that the transformation of the scholars from the 1980s to the 1990s to the year 2000 and until now, it is a quick response. So we learn from what we have, we increase our professionalism, we upskill, we relearn and we learn and we relearn again with a colorful knowledge from various sectors. So the response that we have, Alhamdulillah, our scholars in Malaysia are among the reference points in international market. They always been invited to share our experience. We also always been invited to share on how we develop our guidelines so that other countries that newly developed and require the proper ecosystem can benefit from our experience. In the early years, we also send our staff. You come across a lot of managers, senior managers of Malaysians working in colorful banks. We still have a few of them in Oman, in Middle East, Abu Dhabi, Dubai, even in Europe. At the moment, that still carry Malaysia flag and also sharing our experience elsewhere. So this is where the kind of interactive that we continue to have, and this is also how we continue to develop. I told you earlier that those postgraduate lecturers that graduated with PhD in 2009 or 2004 even will attend a program and sit for an exam. So imagine, they already have their 30 years experience, but still we evaluate their knowledge, ensuring that they have a current knowledge as well as the contribution in any way that they can. So I hope I've answered your question, Cik Anwar.
Thank you so much, Mr. Makhtar. And then That's very good explanation on the issues raised just now. Okay, I think we can have back Mr. Alwi Adam.
Yeah, can you hear me
Yeah,
now?
great to hear you, mashallah. Allahu Akbar.
Too many challenges.
Okay, so the floor is yours, Mr. Alwi.
All right. Thank you very much. Sorry for everything. It's all technical setup. Yesterday was okay. However, let's proceed to the content that I want to share with all the participants today. Basically, I will present on the angle or from the angle of a financial planner or financial planning firm or financial planning practitioner. So we have a quite good blend of speakers today. So we have our economists, our financial market outlook from Mr. Mustafa. And in terms of the product, we have fundraising platform through P2P microlip from Yang Mulia Tun Denny, and also one of the product and services, Synergy, which is the digital asset platform, and also ETIS from our brother Umar Munshi. So we, as the financial planner, we bring the product, we analyze the product, and then do the suitability in order to match the client. It's either from the product and service provider request for us to find the customer, or the customer client come to us and ask what is suitable for them in terms of their financial portfolio. Okay, so it's good. I think in terms of the audience, probably mainly from a financial planning background or practitioner. Okay, so I will share from that angle. So maybe you can gain some insights, or from the sharing, in order to deliver or render your services to your client. Okay. All right. So some structures of the main points. So we listen already to Mr. Mustafa, and I believe as a financial planner, we listen tremendous amount of market outlooks, probably weekly market outlook from the research house and also from the fund house. Yeah. So I will try to summarize in terms of the takeaway input. Yeah. From my perspective, from financial planner perspective, from the practitioner perspective, 2023 outlook, and also in terms of the business, financial planning business, the challenges and opportunities, in terms of the maybe coming or expected crisis, due to banking crisis, or maybe the emergence of COVID and healthcare crisis. And some, I would say, maybe survey from our data. Our data means that this is not the real market data. This is our clients' data. So their behavior, their demand, and their what are their favorites, and also their expectation. Due to the hype of recession and all the development in the market. Okay, so basically three main points. Okay, so 2023 outlook from a financial planner perspective. Okay, so just to wrap up from various opinion from research house, analysts, and so on. So basically for our local market, Malaysia, okay, from last year, we have huge uncertainties, because we understand that in order to have a good economy, we need to have a good government. So the election is over. So that's what I meant by huge uncertainty. So everything is over now, and then we have a government, and then we currently looking at what are the policies, and also plan, concrete and solid plan in order to boost and then to run the economy. Hopefully we have our bull run again. However, for 5 months to date, okay, if we look at the market and also look at the fundamental, we haven't seen any, I would say, positive development yet. Okay, in order for us to have that high confidence to say that maybe I can break 1500 or go to 1600, okay, in terms of the points. However, we have in terms of fundamental, we have our GDP on track already. Okay? Although it's a bit lower if you compare from last year due to the low base effect. But I think it will be the GDP will stabilize around 4 to 5% in terms of the growth. Yeah. So nothing much to expect basically, but we take the position, look and see, yeah, and then continuously monitoring. Yeah. We want to see, yes, of course, again, solid action that can actually boost the economic growth. Yeah. We need the catalyst. Yeah. I think the least that we can expect is maybe the restart of previous mega projects that really help in terms of the market, in terms of the construction and so on, in order to be the first liner, yeah, to boost the market, yeah, you know, the construction, yeah, and then of course due to this OPR increase, it might be hurtful to the company that has high leverage and so on. Yeah. So we need that money flow there. Yeah. So not really optimistic and also not pessimistic. Okay, so it's somewhere in between. So that's for local market. Okay. So in terms of the trend in the client, for the last I think 3 to 4 years, we already diversified a lot out of Malaysia, okay, in order to search for better return. So we will remain to have that kind of portfolio plan in order to get better return. However, for Malaysia, we will look at sectorial performance. Yeah. And also for global, it has been covered a lot by Mr. Mustafa, and then I also gain a lot in terms of the new insight and so on. Okay, so in terms of the mode is still risk off, yeah. And then of course it's still cheaper, okay, in terms of the valuation and so on. We will still keep investing and then ask our clients to be patient and then keep investing. You know, as a advisor, we need to convince client, yeah, you know, for the last 3 to 4 years, why it's not performing. So to keep investing as, you know, dollar cost averaging and so on. So the risk still actually evident from the banking crisis, you know, started by those crypto bank, yeah, in US and also Eurozone. Okay, and then early this year we expect China, reopening. However, the in terms of the performance is quite limited. Okay, so don't expect too much. Okay, because all this COVID will keep emerge even after the border the economic reopening and so on. So let's look at the new development and then do not go all in as yet. Yeah, and also the dollar went up very high, yeah, due to the increment of interest rate. So the height of so-called the shift of power, from maybe US based fraternity to maybe BRICS, 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 or China plus Russia and so on. Okay, so the maybe the agreement to use gold as the currency for the petrol, for the oil, and then this basically trigger de-dollarization. Okay? However, I think majority of reserve of many country and nation are still in dollar. So dollar is still strong as of now. Okay, so if it's to happen in terms of the de-dollarization, it will gonna take time. So it's not gonna take overnight. Okay, so I would say de-dollarization is still high, but it's not impossible in the long run. Okay. So for the sector, consumer sectors remain to be resilient despite rising costs. Moreover, on the non-cyclical consumer, products. Okay. And also increment or increasing growth on consumer cyclical, okay, because maybe the economy, improving. Okay. And then for the technology sector, not to hope too much. Okay, it's still in the accommodation period. However, we can actually put emphasis on this AI or new emerging technology, cloud-based, and also the engineering-based technology like the solar or battery, okay, or EV and so on. Okay. So they went up quite high for the last 2 years, and then it went to retracement, and then it might be another run again, okay? Because after some hot or heated flow of money, yeah, so they will in terms of the performance, they will cool a bit. Okay, so might be good time. However, don't hope for another bull run in the short time period lah. Okay, and then modest performance in terms of manufacturing and E&E, yeah. And then the recovery, utilities, transportation, and also logistics. Okay. So I won't go very detail on this because as a financial planner, okay, we need to take the insight from the analyst and then deliver that information to our client. We analyze and then construct their portfolio accordingly. Okay. And then as a summary from most of the research house, they target KLCI ranging is quite big range, yeah, from 1510 to 1660. Currently is 1420. So we have another maybe 100 points to 200 points to go. Okay. So let's see if we can fulfill the target. Okay. All right. So if you look at the KLCI and then in terms of the formation being formed there, it's not really optimistic. However, we managed to rebound from the uptrend trend line, okay, and then barely survive above 1400. Okay. In order to say that we are okay, it has to stay above 1500, okay, by the end of this year. Okay. In terms of GDP, you already come back to the normal figure, okay, which is 4% growth. So I think in terms of fundamental, we don't really have issue to call for recession. Okay, in terms of the global, US market, and then if you look at the S&P 500, as per Mr. Mustafa earlier, so we can see that S&P is actually strengthening. Okay, however, it's not safe yet. Okay, it's mainly rebound above, moving average 200, and then still lack of catalyst as of now, and then the fear of rising interest rate. However, I will say this is quite good in terms of year-to-date return, which is at 7%. It's good enough, yeah. So 2023 year-to-date 7%, in which people are expecting a recession. So this is basically beat the expectation. Yeah. So probably if you want to position yourself, okay, but don't put all in, yeah. In US market or US denominated portfolio, okay, it might be a good time to do consistent, continuous averaging. Yeah, and then comparing with the alternative market or hedging instrument like gold, yeah, because gold went up to the all-time high for the third time since last 2 years. Okay, first just after COVID, and then I think early 2022 based on the chart, okay, and then due to banking crisis, the collapse of a few, crypto related banks, okay, so people went to the safe haven, and then again we have a gold bull run. However, it haven't break the highest of the previous two peaks, which is at 2000. It go up until 2080 per ounce, USD per ounce. And then as of now, in terms of, if you look at the weekly chart, is still on uptrend. Okay. However, on the monthly chart, it haven't oversold yet. Okay. So signify that it has room for another run. Yeah. So there is possibility of breaking that 2080 or to 2100 resistance. Okay. However, last night we see for the first time in the few weeks that gold already break the 2000 benchmark. Okay, so it closed at 1991 if I'm not mistaken. Okay, so don't be too positive, don't be too optimist. Okay, be careful. Okay, so those who manage to buy at low, it might be good for you to sell it a bit, okay, in anticipation of the failure of the third trial of gold to break 2000 level. Okay, so be careful, be careful, but I don't say it will go down and then crash. Yeah. All right. So let's talk about the challenges in financial planning. Yeah. So when the economy and also the financial market basically going for recession or even stagflation, the demand for financial planning services has been resilient, to say the least. Okay. So people will go to the financial planner and ask for advice. Okay. Moreover, the rising of the interest rate, the OPR is rising. Okay, so their commitment also rise. Okay, so we have the high price of food and also the services, and moreover in terms of the amount of loan, that has been increased for quite a while. Yeah, now and then before this we have a price announcement from Bank Negara, and then now we have about 3% in terms of our OPR. So commitment is increased. So the client will go to the financial planner and ask maybe for restructure, maybe for cash flow advice and so on. Okay, so for financial planner, it's always been busy, and I would say busy than ever. Okay, and then this is also further amplified by the non-performance, I would say, of investment portfolio. Okay, because US has been retracing, and also local market is not going anywhere. Okay, so the client will come and then ask for update, and also question like bila mau naik, dah lama dah invest tapi tak naik-naik, something like that. So financial planners are very busy. Okay, and then their service is actually very high demand for now. Okay, so then they ask for asset portfolio restructure. Okay, before this, we actually do a prediction that USD will go up, and then some of our client put in saving accounts in foreign currency. Okay, now they have to take out the money and then put in local, because USD will go down a little bit. However, it's still strong, in terms of hedging their savings. Okay, so during recession and during economic uncertainties, of course, we have unexpected demand for safe haven or low risk asset. Okay, and then normally they ask or they understand that gold, as the hedging elements of the portfolio. So of course, we advise to put maybe increase from 10% to 15 to 20% in order to preserve the value of the asset. Yeah, And then we see that the consumer also demands on alternative asset, which is considered as low risk asset also, which is REITs, okay? Money market, fixed deposit, and also for those crypto bucks, okay? They see BTC or Bitcoin or crypto, at least the biggest market cap cryptocurrency as the alternative, okay, for gold. Okay, so basically this is the new gold or the gold for the millennials. Okay, so if you look at the basically the background of the customer, okay, those below 30, they don't really understand gold like Gen X and late Gen Y. Okay, so for them, their new money is not gold, okay, but this digital asset and crypto. Okay, so there is a big, huge trend that they see crypto or Bitcoin as gold alternative. Okay, and also it's not just coming from these millennials. Okay? We see also from the big asset management. Okay? They already open account for their client in order to invest in crypto. Okay, so this is not very a long time ago. This is on in March 2023. Okay, last time we hear the news from JP Morgan. Okay, now BlackRock, which is the biggest asset management company. Okay, so they already opened account for Bitcoin and also in talk with Coinbase. Okay, and then the Fidelity Investment. Okay, so they are quietly laying the groundwork for the next Bitcoin, Ethereum, and also crypto price bull run. This is in March 2023. Okay, so yes, this is high risk. Okay, and then many asset managers is still conservative and then still play safe on crypto or digital asset. But yeah, it's just some information. Maybe if we are familiar with gold, go to gold. If you are do thorough study and already have confidence in digital asset and crypto, why not diversify a bit on the basically the next money, the new money. Yeah. All right. Yeah. Non-conventional asset request, which is non-traditional asset request. So growing request for non-conventional asset due to increased awareness and generation shift. Okay. So they want unit trust or managed fund that actually invest or use quant, okay, or quantitative trading, quantitative screener and so on. And then with the sudden emergence of AI, artificial intelligence, that I can generate answers which is better than Google, better than all the search engine, okay, and also can use prompt in order to do design, to do copywriting, marketing, and so on. So they would like to explore in terms of AI team investment. And of course, next, there's definitely digital asset, okay, and crypto, which is quite a while for now, okay. And then maybe the usage of crypto for another project like NFT or another, sub usage of blockchain and so on, okay, which is me myself is not really familiar or expert in, but more on the the currency part, which is crypto. So they started asking, how do I get involved? Okay, and then the next one is team investment, like maybe ESG. Okay, however, in terms of let's say asset class, yeah, like P2P or like our brother just now, 80s, okay. From a retail investor, first and foremost, they are not that aware in terms of that option, okay. And then if they know, majority of them are not quite interested in invest in P2P for percentage of return and also ETs and so on. Okay, However, I think from this conference, more and more information has been delivered to the planners, so that we understand and then we can bring that product and services to the client. And then our job is not to influence but to educate from product and services to the client, so to get the market for it. All right, so for the summary, I think in terms of the theme for recession, I'm not saying it is safe to say, but that may be conclusion for now. Risk and fear of recession has subsided for now. However, don't be complacent. Always be vigilant. And then consumer client tends to be quite conservative. And then during anticipating recession, they will go and opt for safe haven lah. But not necessarily only gold. They will go for fixed deposit. Moreover, the OPR increase. And also REITs. And then REITs also perform quite well. And money market, and yes, we have a quite weird market segment, which is the millennials, in which they take into consideration that crypto, BTC, Ethereum as the replacement of gold, because they don't really have that attachment with gold. Their goal is crypto. Malaysian consumer felt the rising costs, but not economic downturn or recession. So life is hard, but not that hard that people can find jobs or being laid off, across the board and so on. So if we want to answer in simple layman term, winter is here already, but it's not a very bad winter. However, we need to always be prepared for the worst, and then keep our optimistic view. For financial planner practitioner, anticipating a recession, hardship, economic downturn, there will be tremendous amount for those who want to take advantage, offering too good to be true schemes. So financial planner, financial advisor, unit trust consultant, takaful consultant, we need to play our part to safeguard our consumer rights. Don't make they fall into this malicious offers. All this on the surface looks like it is a good investment, promising monthly return and so on. So let's do our part, and we have about 800 registered participants. Please safeguard our rakyat. Their savings, their EPF money. From investing in something that is not trusted. And then too good to be true. Too good to be true scheme. All right. So I think in terms of the presentation, that's all from me. I think I hand over to Mr. Anwar.
So very good. Thank you, Mr. Alwi. Very good presentation just now from our panelists in Alwi. That was eye-opening for all of us, I believe. And especially since Mr. Alwi is from practitioners himself as a financial planner. So I would like to put up only one more question, because we have only another 5 minutes until the conclusion of our session, which is 1:20. So, and I will try, if we have more time, I will give one more question to Encik Makhtar. So let me first put up one question to Mr. Alwi. So if you're looking at the products available currently, so what is the most important things to consider investing in the non-listed entities such as RPS, IRPS, with I think very famous, but we saw there are many issues also which investor faces, and also practitioner spaces. So maybe you can share a little bit on this particular area, Mr. Alwi. Thank you.
Yeah, very good question. I think we can appreciate that suddenly for the last 2-3 years, or maybe last year, we have come through investment opportunities called preference share. Okay, so I think first and foremost, we need to understand that Security Commission has already published their guideline. Okay, so I think first step that we need to do if we are being offered or we want to learn about preference share or Islamic preference share investment, go and then read about the guideline from SC. Just search preference share, SC Security Commission. Okay, you will get the guideline there. Okay, because if I want to get through to that document, it's gonna be quite lengthy. So that's the first number one. Okay, means that it's already guideline for those who interested in investing in preference share. Number two, okay, preference share is meant for sophisticated investors. Okay, so sophisticated investor means that you and your spouse combined net worth is 3 million. Okay, so if you don't fit into this category, don't think about investing. But if you do fit into this category, you can go further and ask for licensed personnel, licensed financial planner, in order to get their view. Okay, that's the first one. Are you a sophisticated investor based on SC requirement? Because preference share can only be marketed to sophisticated investors. Number three, this so-called sophisticated product for sophisticated investors, normally started from 250K. So if that whatever company offer that you can go and invest lower than that, maybe 10K or maybe 50K, they already breached the guideline or requirement. So they might actually breach their SOPs, whatever that they submit to SC. And then the next one is look at the marketer or the promoter. Those who can market this kind of sophisticated product must have CMSL license. Means that the company must have CMSL license. I have yet to see any CMSL company promoting preference share. Okay. So what do we have now in the industry or in the market? The company directly promote to the retail or to the masses. Okay, so this is very, very, I would say, dangerous. Okay, to the investors. Okay, so if you are sophisticated investors and you know how to conduct your own analysis, maybe preference share is good for you. Okay. However, the risk is on you, totally on you, because this is high risk product. Okay. So be careful. I think that's all from me. Yeah.
Okay, thank you so much, Mr. Alwi. So we have 1 more minute, maybe very short one, but it is challenging question also. It's about the perspective of the Sharia products or Sharia advisory or Sharia fraternity. You're looking at Islamic finance, how Islamic finance responds to the economic recession, because we're looking at recession coming to everybody, whether it is people in the Islamic fraternity or in conventional fraternity. So how, on the Sharia perspective, do people in this aspect, how do they respond? Thank you, Encik Mokhtar.
Okay, Bismillahirrahmanirrahim. I think there are few Quranic verses that reminded Muslims about the economic cycle. The favorite one that I always refer to is Surah Yusuf, ayat number 12. Surah Yusuf 12, ayat 46 to 47, where it reminds us about the 7-year cycle, the up and down. So as a Muslim, I think we have to be aware that from the beginning, maybe 1,200 years ago, we have been reminded that economy will always not going up and economy are not always going down. It is important that we place ourselves properly in the right way, either up or down. So inshallah, Islam has nothing to do with wealth creation, but of course, it's part of our wealth collection. There are also a portion of other people through our zakat and our sedekah. I think that's my 1 minute answer, Mr.
Okay, thank you so much, Mr. Makhtar, Mr. Alwi, for being the panelists today. And they already presented well. I believe many people already get a lot of knowledge from this sharing that they've done. And I believe many have put up some question and being answered, some being answered offline from the question. And some, maybe I saw some question to Brother Omar, which he's on the move. So he faced challenges with the internet connection. So that's why he will be answering those questions maybe offline later. So with that, I will like to say thank you to all the panelists. And with that, I will pass the session to Ms. Putri, our MC today. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Assalamualaikum.